Hello everyone, I'm Dr. Arvind Nandishore. Welcome back to Finance with AB. So this video is to introduce a new options trading strategy to every one of you. And there are multiple out there, but why this one specifically? So let me directly jump into the result. The backtested data of this strategy for the months of July, August and September are 251% returns, just profits in July, 133% in August, 411% in September. Now, how is this possible? What is the strategy? This video is all about that. So let's go straight into the strategy. So to explain the strategy, I have come to 915trade.com, which is my favorite options trading tool right now, as you know. Now I have selected, I've gone to the history charts and selected a date 16 September for ease of explanation. Okay. So when you go to the platform, you come across all these quadrants first of all. And on the bottom left, you can see Nifty spot candles, which are essentially Nifty candles itself in the 1 minute time frame. Now in 1 minute time frame, you can see multiple kind of markers here. If these markers are not enabled, just go to settings from the profile and enable the markers. So on the top right, you have hide markers or show new markers. Okay, so this thing is available and you can see two colored markers. So one of them is blue or either blue or pink. So the blue markers indicate that there is an overall buy pressure in the market at that point of time, and the red markers indicate or the pink markers indicate that there is a sell pressure at that point of time in the market. Now, what does a buy pressure indicate? So, when there is a buy pressure, market should ideally be going up, and when there is a sell pressure, market should ideally be coming down, right? So, this strategy is basically based on volume, pure volume. It is independent of price, it is independent of where Nifty is at that moment. Now, let us go to 16 September, and this is a strategy, and you will also be defined an opening range high and a low here, as you can see here. If that is also not enabled, again, please go to profile settings and enable that. Okay, so opening range high and low. So the strategy is basically very simple here. When you get a buy pressure with an opening range breakout, it is not above the opening range. Inside the opening range itself, you get a buy pressure and there is a breakout to the top above opening range high. You go for a call option buy and preferably go for an ATM call. If there is a confusion, go for slightly OTM call as well. So 25,100, somewhere 25,110 here is the opening range high. So on 16th of September, there is a buy pressure here, a blue triangle and all the blue markers, and then there is a breakout as well. So at that point, probably by 9:20, there is an opening range breakout, but you will get to see this by around 9:21 because there is a 1 minute delay because they have to load the chart and analyze all the data and see whether there is a buy pressure. So there's a 1 minute time delay. So whether there is a crossover, you will only understand after a minute. Now on 9:21, you get an entry because there is a crossover at 9:20 itself, and your first target should ideally be around 40 points, somewhere around 40 to 45 points. And if there is enough momentum, if it is steeply going up, so let it run because you might get a 100-point rally as well. So the ideal target is 40 points, so you enter somewhere here by around 9:21, and your ideal target should somewhere be around 150, right? Because you are entering at 110 and 12, your target should ideally be 150 range. So entry at 9:21 and you get all the blue markers here. So there is no need for you to panic and exit. Even if the market is coming down, there is a buy pressure. But still, if it is coming down below 100, then probably you can keep a stop loss and exit. Then also your stop loss will be kind of, I think 3 to 4 points. That's it. Now that is one thing. So you are right here. You do not have any kind of buy pressure. Yes, but still the market is going up. So just hold on. And then again, by here you have a buy pressure, and this has easily gone up to 25,150 and the next candle 25,152. So by around 9:21 to 9:54, you have a trade. So let us say you went for a 25,150 call option on that day. Let us see how the option has performed from 9:21 to 9:54, right? That was our time frame, right? So 9:21 is somewhere here. 9:21, the option was somewhere at around 25 rupees. The maximum highest is 26 rupees. Let's say you entered at 25 because the lowest point is 22. You entered at 25, and by 9:54, you have actually gone to 45. At the lowest point is 45. So let's say 25 to 45, the percentages you can calculate. It's a beautiful, beautiful rally on the first day itself. Right. So that is the trade you have. That is the bullish trade. Now, what about this one? If we get a sell pressure with opening range low breakout, can we go for a put option? Let's see. So for the bearish trade, I have come to 22nd September chart. So on 22nd September, what did we tell? See, initially there is a beautiful range breakout here in the morning itself. That is a bull trade. And on the bearish trade, if we are to take a put option, we can consider an entry here. See, opening range is here, all those things are here. But opening range low breakout with all the sell pressure. The sell pressure started here, so it is still intact. Everything is going well. So you could have possibly entered by around 237 or let's say 238 also. Anything is fine. 238 you entered, and your first target will somewhere be around 40 to 50 points. So probably you can exit by the end of this candle, because you in the live market itself you can see, right, the market is going down. So by 246, so probably by around 238 to 246 you could have gone for a 25-200 put option. The 25-200 put option from 238 to 246, right? Around, what is it, 238. When is 238? 239 is here. So let's say you entered at let's say you entered at around 30 rupee, and 246 is somewhere here. You exited at somewhere at easily 50 rupee. Yeah, let's say 48 to 50 rupee easily. So that is 30 to 48. In terms of percentage, that is roughly around 60%. I need not tell you. Okay, so that is also huge, right? So that is the bearish strategy you can take. And again, see, this is the simple starting strategy. This is part one of the strategy. There is also multiple additions to this, and all the proofs of the backtested data for July, August and September are given in the description. Yes, so you saw the strategy. Now let me tell you, this is part one of this video, because to explain this entire strategy, it might take probably 15 to 20 minutes. So I have split this video, this strategy into two parts. So part two of this video will be released soon. And the Malayalam part of this video has already been uploaded in the channel. I'll give the link to that in the I button here. Right. So please do check it out. Now, how is this? The strategy is simple, fairly simple. Buy pressure with opening range high breakout, go for a call entry. First target being 40 to 50 points. Sell pressure with opening range low breakout, go for a put entry. Another 40 to 50 points target. Now, where can the stop loss be? The stop loss can be the immediate next swing high or low, depending upon whether you are entering a call option or a put option. You enter a call option, the next swing low can be the stop loss, or the next strike price, breaking down the strike price, can be the stop loss. And if you are entering a put option, the previous swing high, or whether you are getting a buy pressure after entering a put option, you get to see a buy pressure exit. You enter a call option, you get to see a sell pressure exit. All those things are there. Okay, so that is again very simple strategy. Every minute you get to see the details of the market, which can easily help you keep a proper stop loss. Now, I hope this strategy do work for you as well. All the backtested data are given in the description for July, August and September month. Please do check it out. Part 2 of the video will be released soon. Till then, take care. Jai Hind and goodbye.